You are welcome back once again. So next line in action now, we are still on group accounts, and we are going straight to note number 13. Note number 13, which I call intra-group current account. What do I call it?
Intra-group current account.
That is note 13 now. Intra-group current account. Now, what do I mean by this? Normally, when parent and subsidiary, it's possible that they may transact with one another. They may do what? They may carry out transaction between one another. And automatically, the parents will be keeping record. Am I talking now?
Yes.
Parents will be keeping record. And also, subsidiary will also be what? Will be keeping record. In the books of parents, look at it though. In the book of this is parent now. And this is the subsidiary. Parents will keep a record of it, will keep a current account with subsidiary. Are we doing that now? You are at this in zero ledger, debit and credit. While in the book of subsidiary, they will also keep a record, an account called current account with parents. They will keep a record like this: the debits and credits. Anytime where they transact with each other, they will be keeping the record here. Let's assume that parents borrow subsidiary money. Abi, in the book of parents, what they going to do? They will debit his account. Abi, let's assume that parents give the money to subsidiary now. Let's assume it's a cash. Give a cash of loan. Let's say 5,000 naira. Parents will keep record like okay, it's a receivable. You debit his account, right? Why subsidiary say, oh, I collected money for parent, oh, we will create the account also, say cash. How much? 5,000 as liability. At the end of the month, this one will balance his own account. This one will also balance your account. These two accounts, they should be a mirror of each other. When I say mirror, opposite way. So if this guy is saying balance carry down 5,000, abi, that will be what? Balance brought down how much? 5,000. Abi, you know what we say? Balance carry down of 5,000. You know what we say? Balance brought down how much? 5,000. Abi, they are what? They are mirror of this one. This one is showing credit. This one is showing what? Showing debit. This one now here okay. For the who sale. Now, at the end of the month or at the end of the period, the current account with subsidiary and current account with parents should be what? Should be the same. Should be with the what? Then at the point of consolidation, you can this in group account, they are single entity according to the breakdown of group. I mean, that's a single entity. You cannot be keeping record that subsidiary is owing you or that parent is owing you by the time you want to consolidate your account. So therefore, these two accounts will cancel out each other. We do what? So our target is that any current account that parent is keeping for subsidiary or subsidiary is keeping for parent, by the time we want to consolidate them together, what do? We cancel out another cancel. But where we normally have challenge is this. Number one, it is very easy. Account with parents, subsidiary 10,000, then all you cancel it is receivable, you also cancel the money payable, your account will balance. But where we have is this. The current account with parents, if this one may be showing 5,000, this one may be showing 3,000. But the both are the same because it's a mirror of each other. You should have the same. But where we have is that Kelele 5,000, Kelele 3,000. Then what are the possible causes of that changes of that difference? The main two reasons for that difference is either cash in transit or goods in transit. Okay. So the main reason why they are not balanced is that we call it what? Cash in transit or goods in transit. Now what do I mean by that? Look at this scenario now. Parents borrow money, give money cash to subsidiary, and subsidiary as recorded 500 naira, maybe toward the end of the month, subsidiary have sent cash to parent. Oh, oga parent o, I'm going 500 naira o, abeg take your money. He now send cash. What you gonna do? You will debit abi? We say bank or cash transfer anything 2,000. From his own record now, alone with bed balance carry down how much? 3,000 abi 5,000. Yeah, what do we have here? 5,000. What do we have here? Balance what? Brought down how much? 3,000. In his own record now, he's showing that he's still owing this guy how much? 3,000 abi. But look at say that with owo kò jẹ́ òbí ó spend owó sóhun, you will expect how much? 5,000. But if because you do the market, balance carry down 5,000 abi, then balance brought down 5,000. So the record now is still showing 5,000, whereas this guy is showing about 3,000. Why? Because he has sent a cash to him, but he's still what? He's still in transit. People London abi transit and on transit. People are going together. I'm on what? Oṣù London, oṣù dọ̀dọ̀ ẹ̀. So because of that, so if now after the day what to the date now, this guy is saying 5,000 current account, but let's go to the date now. 5,000 current account abi 3,000 current account. Can they cancel each other? No, because it's again to balance. So the first you have to do what? You have to balance it before you cancel. You have to do what? How do you? It's very easy. Am I questioning what? By the time let me now show the account now. Now this is parent, this is subsidiary abi. This guy, you see what abi? Current account with subsidiary. You look with here 5,000 abi. Access àdúmàwà àbí tó bá dúró ní àbí èyí náà sọ pé liability side àbí current account with what? With parents. Èyí ló máa show 3,000 àbí. By the time you now prepare your group accounts, we say on a good day, this should disappear. But if you disappear 5,000 and you disappear 3,000, the account will not work, you won't balance because account dey wey gini go balance initially abi. So what do we now do to make the account to be balanced? This is though, since the difference is cash in transit, this is the cash in transit. Ẹ̀gbọ́n mi ò tẹ́ ẹ̀gbọ́n mi báyìí. On a good day, tó bá yẹ kó sì gba owó yẹn, wọ́n lọ sọ ma cheat the account yẹn. If parent has collected the money, how you go to cheat the account? You will debit his cash abi and what? And credit his place abi. So the only thing you need to do to make your account balance is that cash in transit add it to what? To cash. Add it to what? And technically what are you doing now? You are surprised for being able to pay 3,000. So by the time you have added to your cash now, so from the group perspective now, just say your cash. You look at here 2,000. So automatically so release. What I mean now? Cancel. Can you see now? So what we want to do is this. Once your account balance is due to cash in transit, the only thing you need to do, just take that cash, add it to your consolidated cash, or you show it separately as your cash in transit. Depends on how you want to do. In most cases, you can add it to your cash anyway. But that first ṣe too low, wàá ṣe kí ni wàá pèsè kí ni cash in first ṣe too low nìyà kó ṣe kí ni kó mọ̀kọ́ tó jẹ́. But if you do it like that, you are correct. So what do you do now? I say, well, cash in transit there, we did not have to push the everybody. You will disappear with that kind ticket account balance. But whereas if it's a goods in transit that cost difference, the same treatment also. The same word, but the only thing is that we lose cash, we lose away, and also Debenture or go show as well goods in transit. Then what happen now? I get it disappear. Am I communicating now? Is that correct? Very a question. I'm with you now. Are you sure? Why? I'm good to go.
When you want to pay in group,
yes.
In the consolidated.
Yes.
You now say 5,000 plus 3,000.
I'm not plusing anything, no, mommy. The figure is 5,000, abi? Abi? This one is what? 3,000. Our target is that after disappear ilé, can disappear ilé, abi? Cancel ilé, abi? But if you cancel 3, 5, and 3, account will not balance. So you must try first of all reconcile the account first. And I said your best bet is that go and have the difference. Choose one area, add them cash in the group account here. But now you're adding to your cash. Automatically, then what are you doing that you have reduced this by what? By 2,000. You look at pay up to 3,000. So much again, more equal. You can now cancel out. Is that clear? Yeah, that's what I'm saying. Any other issue? Can I continue? Okay. And I said, if it's a boost in trust, the same word, the same principle, add it to your word, to your inventory, and the minimum word will disappear from your record. That's all. If it's going to be cash or use. That's for the intergroup current account. Number 2 issue I want to cover here is the unapproved intergroup service. I've discussed this one now. Let's go to the other one now. Information number what? Number 14. That's number 14. And this number 14. This number 14. Intra-group unapproved service charge. What do you mean by this? Unapproved intergroup service charge. Intra-group service charge. This adjustment always occur when parents render service to subsidiary or subsidiary render service to parents. Abi, let us say now I'm a parent, I engage in legal services. I'm a subsidiary, add a legal case, and they now consult me. That parent come and render service for us. I say no problem. My fee is 1 million naira. You have to charge them now. You are legal entity. You are different. Abi, but that you want to do, let's say give you later on. So you now charge them to pay 1 million naira. Now look at me. If they paid, no wahala. If they paid, no what? Pass for when you render the services, they pay your money, no problem. But where we normally have issue is that as at the day that we're updating, that amount has not been paid. Has not been paid. So we're not playing. Let me show you now. This is the parents. This is subsidiary. Abi, a parent render a legal service, for example, a legal service to subsidiary. And how much is the fee? 1 million naira. How do you account for it? If a parent render service for S, how do you do? In the book of parents, what is that? Income, Abi. How much? 1 million naira. So you credit your income, am I talking? And you debit your what? Your cash. Abi now? Am I talking? You credit your income and you debit your cash. But in the book of subsidiary, to him is what? Expenses, Abi. Am I talking, please? How much expense now? 1 million naira. How do you do? You will debit your expenses and what? You credit your what? Your cash. That's what you want to do your account. What's up? If you are paid, nothing to worry about now, Abi. But where we have issue is that two parties somewhere here, if has not paid the money, if has not paid, let me pay as at the end of the year now. Two parties somewhere here, parents will do what? Parents will credit his income, Abi, and will debit what? Receivable. Abi now. One subsidiary what? Will debit his expenses and what? And credit is what? Is payable. This one, I don't have anything with it. But what we have used is what? Is this? Because they are what? They are intergroup what? Debt. They are what? Intergroup debt. It's a debt. Intergroup. So in that case, and don't forget, I said at the point of group, they are what? They are one. Wọ́n lè bá ara wọn jowó. Parent and subsidiary will take it, kò lè bá ara wọn jowó. So by the time one of the things that we going to now, they will cancel each other. Your receivable, your payable, they will disappear. But already you're taking into an income and being no one. So when the income, so the expense, but that intergroup loan one layer, debt one layer, will cancel each other. So when you have unaccrued intergroup services like that you have not paid for it, it was what? It will result to intergroup debt. And any intergroup debt will cancel out one another. unaccrued income. So if you want to know, understand it better, read this story that we have there. Then note number 15. Note number 15. Bank balances. What do I call it? Yes, that's another note that I have to do. If a subsidiary, this is a parent and this is a subsidiary. If subsidiary has a bank balance, if bank balance of parent is 5,000 and subsidiary is 2,000, what we do at the end of the day, what do we do now? We say cash, parent plus subsidiary, you add them together, agree? But where do have use this? If parent is having bank balance and society is having bank overdraft, you must not work, you have to show them separately. Show the parent separately as cash at bank, then show society as well as the bank overdraft. This is liability, abi this one is overdraft. If this one is overdraft, this one is a cash at bank. So you must show this one in group account as well as cash at bank. This one as well as bank overdraft. You must not net the bank for parents with overdraft or subsidiary. It's not allowed. It's not what? It's not allowed. So they normally netting off of bank balance is not what? It's not allowed. So therefore you must not net them off from each other. Is that clear? That's for the bank balance. Next one, number 16. Debenture and loan stock. What do I call it? Debenture. If you can remember, we have discussed preference share. In this case now, a parent can acquire ordinary share of a subsidiary. At the same time, he can also acquire loan stock of that subsidiary. Am I talking about two things now? Please, the same treatment that we give preference share, the same treatment will be given to what? To loan stock. That means that if you don't understand, or if you have not watched the video, go back to the video now, go and watch it. Or if you don't understand, go and read it. It's already there. How to treat preference share. When a parent acquire ordinary share, I sit down acquire what preference share. The same treatment will be given to debenture, loan stock. But the only issue that we have here is this. Okay, let me show you now. That's the number 16 abi, debenture and the loan stock. If this is parents subsidiary, if parents have a loan stock of 5,000 and subsidiary have a loan stock of 2,000, if they are of the same class of loan stock, level abi, it could be 8% loan stock, 10% loan stock, 6% loan stock. If they are of the same class, if this one and this one, if they are of the same class, then your group account now it will be parent plus subsidiary and 7,000. That will be your loan stock at front of group. But where we have to use this, if parents has acquired part of this loan stock, that's an issue here. The principle is this: if parents has acquired, let's assume now, parents acquire 10% of this loan stock. You look at acquire, but the parent has acquired, let me do this now, loan stock, parent 5,000, so that is 4,000 down. Or as well, a loan stock of subsidiary. Or acquire 40%. You have found the 400. You have 400. Abi dash. Now, at the point of consolidation now, about of what?
Consolidation.
Your group account now, your loan stock in the group account now. The loan stock in the group account, parent to the parent 5,000. The loan subsidiary plus 2,000 minus the nominal value of the portion that the parent acquire in subsidiary. Nominal value. Because sometimes what you are seeing here, it may not be nominal value because it will be recognized at what? At cost. At what? Of course, man, maybe value. So what you must remove here is what? Is nominal value of the loan stock acquired. Of loan stock acquired from subsidiary. Owayo, Olape Itabu loan stock. Am I talking now? Hey, why? Who you say you go call lawyer also more? Match your class in law. If you don't understand, let me know. I will explain. That's how I'm teaching. I'm taking it step by step so that everybody will understand. Because there are the issue that you have to face in reality in exam. You will love everything together. But what you need to do is that once you understand the principle for each of them, just what just apply it. That's and move away. Now, so for the group account now, what are we doing now? Parent 5,000 plus subsidiary 2,000 then minus the intergroup loan stock. What are you looking for now? Nominal value that are removing. Am I talking now? Now look at this example in that page. Let me show to us. Let's look at that page so that I can also explain better. Now, look at the scenario here. This is H limited. This is S limited. We have 10% debenture. This was having 1.5. Abi, this was having what? 850. Then we have 12 and a half debenture. This was having 900. This was having what? 600. If parents does not acquire anything from subsidiary, so we assume that way parents already morality of morality does not buy any loan from subsidiary now. So our group now will be what? Parent plus H. You know what? Oh yeah, no, 2,350. Now rent plus 600. 1.5. One adding together because they have what? They are the same class of what? Of loan stock or debenture. They are the same class. So I think the same class. You want or the backup. But let's start with a scenario right now. When the parents acquire from subsidiary, that's where there's a taboo. Look at this example now. So when the parents acquire from it now, I'm still on this version now. Are we there? I have H and subsidiary. Long-term investment. Long-term investments. 150,000 of 30% debenture of who? Of S, or let me say in S. Are you there? 150,000. Abi? Now, this is nominal value. Are we sure that? Nominal value. Hello, son. The nominal value and the amount you pay that work, they are the same. Am I talking now? Now, the 30% debenture. Now, parents ask how much? 500. So how much? 300. The reason is that this 30% both of them have the same thing now. Out of this one, 300 now. The parents are planning acquire 150. Am I talking now? Am I communicating with this class? This is the question. This is the debenture of parents, debenture of what? Subsidiary. Out of the subsidiary own, parent 150 million transfer you know it. But you know something? Because you will recognize your investment at cost. So only pay the book value, nominal value, and the corporate are the same. So in this case now, by the time you go to holidays now, your group account now is covered here. Your group account now will now be our 30% loan or debenture now. Debenture should be what? Parent alone 500. Subsidiary alone 300 abi minus the nominal value of what parent acquire. Between this one and this one, this is nominal value now. This is nominal value now. That's how much? 150. You know, our group now will be how much? We are this and this. 650 abi, that will now be 650,000. That's what we are going to show you your group account. But where we have a situation whereby the nominal value and book value are different. That's yàtọ̀. Then that way there's a what? There's a goodwill on the debenture. There's a what? Hey, come back. There's a what? Now if I will buy, go to sample 3. In this case now, it's a question though. It's a question though. For how much does he pay? He paid 165. Can you see now? He paid how much?
165.
So in this case now, the first you have to do at the point of the group now, you will have for parents as usual. Let me show you here. Let me show you again. Right. Now our group account now, we have since the nominal value and the amount that you pay are different, right? So that will be goodwill on debenture, which will be what? Consideration paid. How do you pay? 165. Then nominal value of debenture acquired. Nominal value of debenture acquired. Alone 150. What is the difference?
15,000.
15,000. This is what? A goodwill. This is what? So this goodwill will be what? Will be added to your normal goodwill at acquisition. Normal goodwill that I can see here. So if I remember now, that's what we did to preference share. Abi, what to pay for preference share and nominal value of that preference share. The difference is your goodwill, abi, and you will add to your goodwill. So when you have to put down, but the only thing you can see anyway, any tó bá tún sílẹ̀, alọ́mọ àdèwọ̀ share, abi, you can remember that preference share. You when you have 40%, the main spend will be added to the preference other NCI. This one now, not no NCI. What you have to do here is just say in your parent at or group account now. So what you consolidate now will now be parents. That's our group now. Will now be parent. How much is parent figure? 500 plus alone 300 minus nominal value. The nominal value here 150. Look there 650. That's all. So this one go to goodwill. This one go to your radiation. That's it. That's when you have that group dependent.
So if the amount paid is lower than nominal value,
You can call it date of market purchase. Eh? And you will say now, if you are saying that thing now, so I will say, use of pushing that bill, that will be date of market purchase as usual. To your date of market purchase, if there is always fine with your goodwill. But what you have here must be you are adding your goodwill. If it's a game of calculation, just saying you are spying on your goodwill. Kí ni bá dé ní ọ̀gá pé purchase? Tí ẹ get goodwill. This is affecting goodwill. That's what we are saying. Anything that you have here is affecting your goodwill. The only thing is except why pay goodwill you wan get market purchase, so that you have to put them together. It's going to your bill. You must not let it with your goodwill first. So, any question before that? Before we move away from that, so please, I want to review that aspect. So today now, by the grace of God, we're able to look at intergroup current accounts as far as new adjustment now. Then unapproved and service charge, bank balances and what, debenture and low stock, and we're able to discuss little sample on them. So I think I will not be able to do anymore because of our time. So away from that, we are going to pause here for tonight. Thank you very much. Have a wonderful night.